Welcome back to Bazaar Morning Call. I hope you're having a good morning. Well, as promised, let's get straight to the top stocks that you're tracking for you. Sonia, you go first. Reliance Industries, I think that's the one you're tracking top of the list.
Oh, absolutely. And, I think Reliance will do well this morning for a couple of reasons. One is that the numbers were very strong in Q4. They were better than what the street was estimating. It was an all-round beat. It was the highest ever quarterly profits that the company has reported, led by a very strong oil to chemicals business. The consolidated profits saw over a 20% growth. The EBITDA margins have improved. But the star of the show really was the oil to chemicals business. So if you look at it, the EBITDA in the O2C business was up 17% quarter on quarter. And from being single-digit margins last quarter, it's now moved to almost 13% margins in the oil to chemical business. So the street will like that. Jio also reported a steady performance this time. Despite no tariff hikes, there was a good revenue growth, and the average revenue per user on a year-on-year basis has gone up almost 7%. Most brokerages have, given a thumbs up to the numbers this time. Morgan Stanley says it beat street estimates. The energy vertical is what drove the beat this time. Kotak Institutional Equities has reiterated a buy with a revised target price of 2,800. It remains their preferred pick as well. While Jefferies has upgraded the stock, they say that apart from the oil to chemicals business, retail is growing at a scorching pace and should add an additional 30% compounded EBITDA growth in the retail vertical particularly. Of course, standard disclaimer, Reliance Industries is the owner of the channel that you're watching. It owns Network 18 and TV 18. But I reckon that the numbers will be taken very well by the street. Also, remember, the valuations are now close to, the lower end of what the historic valuations have been. So the risk reward looks favorable according to a lot of brokerages.
Absolutely. Harshvardhan Dole and Balaji Subramaniam will be with us to discuss more about the Reliance fourth quarter results. That's coming up a little later here on the show. So that's Reliance. But the other one is ICICI Bank fourth quarter numbers, and numbers are a clear beat. Net interest margins, especially the highlight. Abhishek is here to wrap this up for us. Abhishek, morning.
Morning, Prashant. So, Sandeep Bakshi has created records in ICICI Bank in Q4 FY23 results. One of the best record is that the net interest margin is at all-time high at 4.9%, with the domestic net interest margin crossing the 5% level for the first time ever. Even the international net interest margin is at 26-quarter high. So, the NII growth of 40.2% YOY is perhaps the best that you are seeing in last 8 years or more, and this has driven the highest quarterly profits for the bank. The highest ever return ratios are also seen, with ROA of 2.4% and ROE of about 18.9%. Asset quality, they continue to improve. Gross NPA ratio is one of the best that you are seeing in 33 quarters or even more. Unsecured book, now that is continuing to grow. It's at 22-quarter high in terms of percentage of the loans, coming in at 19.4%, and this has driven the net interest margin as well. On the flip side, deposit growth is a bit of on the lower side, given the fact that it's at just 10.9% YOY. And going ahead, as management has indicated, the net interest margin will come down from current levels. But that's not a big worry, given the fact that net interest margin of 4.9% is pretty strong. So in terms of their performance versus our poll, both the NII and PAT is a beat on our poll. Back to you.
All right. Thanks a lot for that, Abhishek. Appreciate it. Let's talk also about HDFC. You're tracking that one as well. There are some RBI relaxations.
Well, for SDFC Bank and SDFC Limited, with respect to their merger, RBI has provided certain clarification for requests made with respect to merger by the entities. So for PSL, that is Priority Sector Lending Target, the adjusted net bank credit calculation considering 1/3 of the loans will be effective on date of merger. So they will get a timeline with respect to, meeting the Priority Sector Lending Target for the first year. That is about 1/3 of the loans, and in next 2 years, they will have to meet the balance or the 2/3 of the loans. So investment, including arms and associates of SDFC Limited, can continue as the same investment of SDFC Bank. So RBI has permitted various stakes, that is SDFC Life and SDFC Ergo, to over 50%. Remember that for SDFC Ergo, it is a very important clarification coming in. And for SDFC Credila, they have to bring down the stake to 10% over the next 2 years. So SDFC HDFC Bank will comply with the requirements of CRR, SLR and LCR without exemption. So this can hit the net interest margin or in the near term, but it will get panned out over the next few quarters. One-time mapping of HDFC Limited's borrowers must be done by HDFC Bank for benchmark and spreads. This augurs well for the interest rate, and HDFC Retail, MSME and other floating rates will be linked to benchmark within 6 months. This is also on positive side. Back to you.
All right, thanks a lot for that, Abhishek. Well, one of the stocks that could be reacting to negative news flow is Sun Pharma. Ekta joins us to fill us in on that one. Ekta, morning.
Thanks for that. Well, yes, the news with regards to Sun Pharma is negative this morning. They have received a letter from the US drug regulator for their Mohali facility, which is in Punjab. The letter is titled to be a consent decree correspondence or a non-compliance letter. This is with regards to the company's inspection of the Mohali facility, which was undertaken by the US drug regulator in August of last year. And at that point in time, the US drug regulator had classified the facility as official action indicated or OAI, giving you an indication that, the facility is possibly online for corrective action from the US drug regulator. Now, the company has said they have to take certain corrective actions before releasing final products into the US. That includes retaining an independent expert to conduct batch certification. The company says they expect a temporary pause in release of batches from Mohali. Now, multiple brokerages have written on this. For example, Incred, they expect a low mid-single digit impact on numbers for a 3 to 6 month time period. Now, the impact, according to me, could possibly be limited also for Sun Pharma. I'll come to that in just a bit. But this is the second plant which is under the scanner for Sun Pharma. The first one is the Halol plant, which has an import alert. Mohali, remember, has always had an issue all the way since Ranbaxy times. But nonetheless, the market could be very incrementally bullish on the specialty business of Sun Pharma, which could give it some cushion.
All right, Ekta, thanks very much for that. Well, let's get back to banking. Yes, bank reported numbers as well. Abhishek is with us with that detail. Abhishek.
Well, Prashant, to begin with, it's surprising that their asset quality actually deteriorated a bit on a sequential basis, despite the fact that they have sold all their bad loans to ARC. So gross NPA ratio has increased by 15 basis points on a sequential basis. Both the deposits and advances growth are below the industry benchmarks. So they have lost market share in advances, both YOY and quarter on quarter. However, the net interest margin is at 9-quarter high of 2.8%. They continue to remain weak, especially on the operating efficiency, as their cost to income ratio is at 72.1% when compared to 70.7% in the previous quarter. So in terms of our poll, the NII is ahead of our poll. However, elevated provisions have ensured that their PAT is below our poll. Back to you.
All right, thanks a lot for that. We will, in fact, be joined by the management of Yes Bank later on the show, so do stay tuned in for that. Prashant Kumar, the MD and CEO, will be with us. But let's get back to tracking numbers now. Macrotech developers came out with their Q4 numbers. Let's find out how it looked in the context of this big boom that the realty space is seeing. Sonal, how were the numbers this time?
Well, they were good. We did get the operational update last week itself, and it was a good set that the company reported. Now they've given guidance for FY24, and it is looking good. They're expecting pre-sales of 14,500 crore rupees, which is a 20% increase versus FY23, where they reported 12,064 crore rupees of pre-sales. Expect operating cash flows also to jump up to 6,000 crore rupees. And if you look at net debt, they say that they expect continued reduction and also aiming for ceiling of below 1 times net debt. That would make it below 6,000 crore rupees in terms of net debt for the year to come. They also saw 8% pricing growth in FY23. The company says that they have a policy now to distribute 15 to 20% of their profits as dividend, which of course the shareholders will like. They announced ₹2 per share as dividend this time around. Also a bonus of 1:1, so the street could take some heart from that. In terms of the UK investments, they repatriated 550 crore rupees in FY23. They expect additional 550 crore rupees in FY24 as well. So the cash flow situation is looking good as well, and they have strong targets for FY24. Expect the stock to be in the green.
All right, thanks a lot for that, Sonal. Remember, we'll be interacting with the management of Macrotech developers later on the show as well. Well, let's wind these stocks that we're looking at with Rima. She's joining us to tell us some more stocks that are in the news. Morning, Rima.
Hi, good morning. So Wipro is a stock I'm watching today because the company will be considering a buyback along with its numbers on Thursday. That's the 27th of April. This will be the company's fifth buyback. Last year, the company did not do a buyback because they were focusing more on their M&A. There were cash payouts associated with their acquisition, but now they will be doing a buyback. According to JP Morgan, the size of the buyback could be $1.25 to $1.5 billion. Motilal Oswal says the buyback size could be closer to $9.5 billion, so a little more than $1 billion. Morgan Stanley says based on the past buybacks, the size could vary from 6,500 going up to 10,500 crores. Cash in the books is ample at $2.7 billion. The past three buybacks have been tender buybacks. This is something we can expect this time too, and promoters always participate in the buybacks. The good part about a buyback is it tends to provide some price support. Now, IT companies are going through a bit of a troubled time given the uncertain environment. So even if the numbers are disappointing, at least there is that buyback support. MapmyIndia is the other stock that I'm tracking. It's an okay set of numbers. No big positive surprise. It's not a bad set of numbers. Revenue growth of 27%. Profits too have jumped up on a year-on-year basis. Back to you.
Right, Rima, thanks very much for that. So those are a few more earnings which are coming through. But let's focus on our energies in the commodities space now. Manisha is joining in with... Okay, I think we'll get to Manisha in just a bit. Let's get you a quick recap of our list of top 10 stocks. Stocks with positive news flow are Reliance Industries, ICICI Bank, HDFC Bank, HDFC Life, Macrotech Developers, Wipro and MapmyIndia. Stocks with negative news flow are Sun Pharma and Yes Bank. Okay. Now let's get to Manisha for a quick roundup of all the action in the commodity space. Manisha, morning.
Morning, Prashant. Thank you for that. Well, I'll start with the crude oil prices, where we are trading at a 5-week lows right now. We've seen 5% of a decline in the previous week. And this is for the first time in 4 weeks that U.S. has added gas and oil rigs, and that seems to be weighing on. Also, the markets are waiting for the first quarter GDP numbers from the U.S. this week, and that will give us further direction. But the concerns about the demand growth in the global market seems to be weighing onto the metal prices also. So you have steel now trading at a 4-month lows, and we've seen prices decline by 3% in the previous week. Copper prices fell 2% previous week, and we've started this week 0.5% on the weaker side as well. There has been a 19% decline in imports in China in the month of March, and the premiums have continued to decline. The inventories in Shanghai have been increasing. So some bit of a red across the street when you look at commodity prices here, especially metals, most of them trading in the negative right now.
Okay, Manisha, thanks a lot for that. So steel prices at a 4-month low. Let's slip into a quick break. When we come back, we will be joined by market expert Prakash Diwan to talk about a whole host of stocks and the markets. We'll also be joined by Harshvardhan Dole and Balaji Subramanian to discuss more on Reliance's Q4 results. Stay tuned.